Assalamualaikum and very good morning to our beloved lecturer Dr. Nurlida and my fellow friends. My name is Muhammad Safiq Kumar bin Omar. So today, I will discuss an argument regarding Malaysia's current issues, which the title is Malaysia still has room to support the economy without resorting the unconventional monetary policy. The article was found in the business paper, The Age Market. Current year in 2020 are very challenging year, where global economy are severely hit by the COVID-19 pandemic. Several central banks in the world had increased their bond purchases to finance aggressive stimulus to counter COVID-19 economic pain. These bond purchases, scale and longevity is important to determine whether there is an impact to the central bank credibility in managing inflation. In Malaysia context, government bond purchased by Bank Negara increased significantly up to 10.9 billion, especially in March and April. This statement questions whether Bank Negara Malaysia will change the policy to unconventional monetary policy or maintain the current policy as the pandemic going to the second wave. The authors highlighted that Bank Negara Malaysia clearly thinks that it is too early to discuss about the quantitative measures employed in Malaysia. Central bank monetary policy and government's fiscal policy are enough in remedial confidence as well as stimulate the economy. Collaboration needs to be happen without any harm to the independence of Bank Negara. Therefore, unconventional monetary policy is still undefined by central banks and another cut rates will be employed if necessary. To summarize the point, the quantitative measures will not be applied by Bank Negara as the current monetary policy is enough to help the government and Malaysia still can support the economy. Maybank's economic researchers said that central bank is still within limit authorized for stabilizing the domestic bond market in terms of liquidity and yield. In addition, the level of purchasing government bonds has reduced as return drop as well as the foreign investor return to the bond market. The purpose of central bank purchasing the government bonds to stabilize the market among the broad selling pressure in the capital market means that government bond purchases by Bank Negara to avoid more volatility in the bond market and provide more liquidity during current crisis. There may be some space for the government to carefully operate given that the market must be assured that there is enough security in place to ensure the measures are temporary. Next, if the quantitative measures are employed, there is risk of hyperinflation and also worrying about impacting the ringgit. The downside risk of lost confidence in ringgit will exceed the benefits of terminating bond return. There is some investors still confident in purchasing Malaysian bond, where there is ample liquidity in the financial system, even though the central bank interest rates cut, resulting in low bond yield. It is good decision by Malaysian government to raise funding in the market without relying Bank Negara to buy its bond. On behalf of Bank Negara, there is nothing that government tapping the central bank to help funding the COVID-19 economic recovery scheme. Central bank can provide temporary financing to the government if there is any emergency that hit the economy such as this COVID-19 crisis, but strict to the terms and conditions. Other review related to the point I had mentioned, the latest purchasing bonds by Bank Negara helped the government to inject more money for the stimulus to support the economy. The central bank stated that the trimming cumulative 125 basis point in the OPR this year will keep providing the stimulus to the economy and the central bank will remain committed to take advantage on its monetary policy levels so that it will create enabling conditions for a sustainable economic recovery. Bank Negara still has enough room to cut the OPR further if the economic recovery meet with another danger or slow down. On the domestic economy, the third quarter of 2020 growth has showing significant improvement supported by external demand recovery and growing in production activities. The reopening economic activities plus with the fiscal package by government help to restore the domestic economy and attracting more foreign investors to inject their funds to Malaysia economy. Government bond markets benefited as the attraction for carry trade strategy rise, thus make the global funds back into high-yielding bonds. On the other views, it is true when central bank issued quantitative measures, there will be hyperinflation as government inject more money supply to the financial system. The available services does not change, but households will have more spending when product has fixed supply while the demand increase. The price of product will rise eventually. It means that the quantitative measures will suffer the economy with too much inflation. Next, some economists believe Bank Negara is not tapped by government as the central bank has another ways to helping the recovery instead of further cut rate. The central bank still can use administrative measures and other regulatory and supervisory relief to fight against the economic impact of COVID-19, such as extending the loan moratorium for a suitable period of time as well as giving permission to banks to operate below 100% of minimum liquidity coverage ratio requirement and 80% of lower net stable funding ratio. However, there is a statement against the argument. Governor of Bank Indonesia, Perry Wardio, said that unconventional monetary policy in the banking system is more effective in helping the economic recovery, and they need to keep an attractive spread for foreign investors as their consideration for keeping its benchmark rate unchanged. The government of Indonesia made of the central bank as the standby buyer as well as the payer of interest for bonds sold by the government to fund the COVID-19 recovery schemes. We can see that Indonesia government really tapped their central bank. If investors view the government put all this under the central bank, therefore they will lose their credibility. For Bank Negara Malaysia, current rate is enough for this year as the economic stabilization and recovery are beginning to shape. The cumulative interest rate cut seems suitable for now, adding that other fiscal support, fund aid and relief measures have helped to reduce the economic damage. The current monetary space should be whole for future unexpected events. The central bank also has introduced measures to increase liquidity into the financial system, collaborated with the fiscal boost measures and the recovery in the global economy. It is positive for Bank Negara to maintain rate. Besides that, instead of issuing unconventional monetary policy, Bank Negara can use another method such as expand and extend targeted funding scheme. From previous scheme, there is around 10.3 billion had been utilized from the 13 billion allocated by Bank Negara for giving soft loans to small and medium enterprises under the Perhatian Rakyat Economic Stimulus Package to make sure they can survive from the cheap funding during the pandemic. In a nutshell, Bank Negara believe that they has done everything what they can do to help the economy. The important thing is to make sure that the funds is spending efficiently and it flows through the economy with greater impact. Even though Malaysia still has space to cut further the interest rate, it must be kept for future shock. We do not know what will happen next. For current economic activity, it is showing recovery in the second wave after the reopening domestic operation. As explanation above, therefore, Malaysia still can support current economy without cut rate further, even though there is room to lower it. Bank Negara chose to keep no space for the future if there any crisis hit the country again. That's all from me. Thank you.